You're watching SBA Today. With all the latest news, stories, and advice, here are your hosts, Paul Long and Tonya Mazurek.
And welcome to SBA Today, sponsored by SBA Collective for the week of March 10th. I am Paul.
And I am Tonya. And guess what, guys? To join my brother from another mother, we've got the godfather himself of SBA, Mr. Lance Sexton, joining us this morning to talk about, what are we talking about?
Trainwreck.
Do I hear anything?
Yeah, where's our sound? We need our sound.
Train wrecks. There it is.
Okay, thank you. I need to get one of those like boards where it's got all the different sounds. And so I can like, I feel like we need that. Yeah,
I just want you to know, back in my early days when I did disco dances back in the early 80s, I had a mixer board that had sounds.
See, that just
I've seen you in your. I've seen him in his disco outfit, Paul. I'm just saying.
Oh, that I have too, actually. I think you posted that online. Mm-hmm. Well, welcome, Lance. Right. We love having you with us as always. This one's going to be a fun episode, guys. I'm excited for this. So, again, we're talking about train wrecks, SBA lending train wrecks. And the first person we thought of was Lance because he's never had to liquidate a loan. I mean, it's really
he's not seen any. He's seen all perfectly good deals that have gone from A to Z.
It's so impressive.
Easy, right, Lance? Right, Lance?
Yes.
Tell us that's how it looks.
I'll say yes.
I'll agree with you. Liars.
Well, it's the nature of SBA lending. That's painful. That may change which one I talk about.
Do you have one about trains? You took a train as collateral.
Yeah, right? Well, I'm sure you got plenty. You pick and choose, man. We'll flow with you.
That's right. Let's do this.
Well, if you want me to start, I could take two quick ones, if you don't mind. Okay. One is an SBA loan where the use of proceeds, of course, we definitely identify the use of proceeds when we're underwriting the loan. We double check everything when we're closing the loan. But when we get to the closing table, we find that there's a significant use of proceeds that was not accounted for. And so you end up in a position of immediately having to backtrack, changing the use of proceeds, effectively re-underwriting the loan because significant simple use of proceeds changes can be a memo. If you have you buy a piece of equipment, it's not too expensive as you anticipated. You got a little extra left over. You move it to working capital. You write a memo. You document the file. But what happens when you get to the closing table and you realize that the borrower left out a critical, significant piece of equipment, and the borrower sitting there saying, "I can't open my business if I don't have that." And I've seen that happen multiple times.
And the funds were to purchase that piece of equipment, and you guys didn't catch that until closing?
It sounds like he didn't even put it on the use of proceeds to go towards the piece of equipment, and then all of a sudden recognizes, hey, I need money for this.
Yeah, you have a borrower, and we were talking about this when we started about the nature of entrepreneurship. Entrepreneurs, sometimes get overly excited, sometimes don't cross all the T's and dot all the I's. And a circumstance, I've seen this happen multiple times where a entrepreneur came in to get a SBA loan. Mm-hmm. They've identified in their business plan everything they needed, but they forgot something significant. And it was not identified until day before close or the day of close. I've seen that happen several times. And different SBA lenders approach that differently. I think you pull back, you go back to underwriting, you re-underwrite it, you change the loan amount. and you close it on another day. Some people go ahead and close the loan and then do a follow-up loan.
Which is why servicing comes into play, maybe.
Yeah. But there are a lot of different ways to handle it, but that is one significant off-the-rails closing issue. A second that is fairly common, and it's tax transfer.
Sorry, buddy. I got to go back on this because how did it end? Did you extend the loan? Did you say too bad? What happened?
Under my advice, we paused the close. We sent it back to underwriting, increased the loan amount, accounted for that piece of equipment that they forgot about, and then closed the loan down the road 2 or 3 weeks.
Well, and I want to bring up something with that because I think a lot of people out there don't understand and don't realize what if you get to that closing table and you're already very, very tight on that debt service coverage ratio, guys.
Oh, yeah.
You're already very, very tight on getting that deal approved and ready to go in general. And then you get down to close like that and you forget a significant piece and then you've got to up that loan.
Yeah, it still has to meet the underwriting standards and the SOP requirements for debt service coverage. But in all of this most of your closing train wrecks are caused by not doing an appropriate level of due diligence up front, not asking the hard questions. And that kind of leads to my second one, guys, tax transcript issues. Every SBA lending shop that I ever built, and quite frankly, in most of those guys, I was the BDO, I was the underwriter, I had an underwriting assistant, I was the closer. I even had a notary stamp, guys. I would stamp documents while I closed them, but I performed all functions. When I was doing it where I was intimately involved, I collected the IRS 88, was the 4506T back then, but the IRS appropriate form for getting the transcripts in one of my initial meetings. Okay, where the mistake comes in, sometimes underwriting might not send off for the transcripts, receive the transcripts and reconcile. Understand that they're all there, or there may be one missing. And it gets to the closing team. They approve the loan, it gets to the closing team, and then the closing team is sitting there and saying, Lance, we have the 23 and 24 tax return, but there is no record of them filing in 22. And
no time.
There's a couple of paths that you can take in that circumstance.
Right.
And depending on whether you're a delegated lender or a non-delegated lender. If you're submitting your loan's GP, you're going to have to get those transcripts and submit them with your loan application to SBA. Yeah. So you're not going to be able to close the loan. However, SBA does this to us. They give us enough rope to hang ourselves. If you're a delegated lender, you could go ahead and close that loan and try to resolve the tax transcript problem, but you can't disperse it until you resolve that tax transcript issue. So tax transcripts, whether it's a missing tax transcript. Also, guys, I've reconciled hundreds, if not a few thousand tax transcripts. And I would say 98.5% of them have no variances. But if you wait too late in the game and you get all 3 years tax transcripts and there's 1 year that has a gigantic difference, and SBA says in the reconciliation, if it's reasonably explainable, you can memo that tax transcript. But what if you have a huge difference between the tax transcript and the tax returns received, and you can't explain it, and the borrower can't really explain it? That will cause you, like I said, the tax transcript issue, whether it's missing or a big variance, would cause a GP lender not to be able to submit, would cause a POP lender to either not close the loan or close the loan and rely on getting the tax transcript issues resolved. And if the delegated lender does that and they never get it resolved, guess what? They don't have a guarantee.
And you know what? With that, am I echoing?
It's you.
Being a recovering GP lender from my previous institution, right? Way back in 2017, we used to submit the 4506T early in the package process. We did as the lenders. Now, nothing ever came back correct. So we were consistently redoing those daggum documents, but we did it early in the process because of exactly that reason, because you couldn't go anywhere. If those transcripts came back delayed, you were stuck. And speaking of a train wreck, talk about during COVID with those transcripts.
Oh, yeah.
Total train wreck during COVID, because I mean, we got stuck so many different times, and then you couldn't even get the transcripts, let alone. Yeah.
But really, guys, I had, Paul, 7 or 6 different things that I could have talked about. Tax transcript, and I'm gonna briefly blow through them, but tax transcript issues, unknown lawsuit issues that pop up at the last second, equity injection verification issues, contractor issues. You're doing a construction loan and suddenly the contractor pulls out at the last minute.
Yep.
Significant use of proceeds issues. Those are my big ones that cause train wrecks. But the answer to all those problems is early and solid due diligence on the front end.
Yep.
So let's go through them one by one and throw in some things that we've seen. What do you think, Paul? Because I know all three of us have seen things on each of them.
Well, I think I want to start with tax transcripts, because that's always a crazy thing. And I know the rules of, I don't know if they've changed in the last couple SOPs, but let's say, for example, on the occasional, you have 25, 24, 23 tax returns. Okay. They're missing right in the middle.
Yeah.
What do you do? Right.
Paul, you bring up a great point. You can still move forward as long as you have an accountant stamped or an IRS stamped tax return on the middle year. You can make the assumption that they filed their taxes. You have to have proof. For instance, if they owe tax, canceled check, whatever, however they paid it, you have to have proof of it. But you can make that assumption. But if year 1 and year 3 are missing, you got a bigger.
I didn't know that. I learned something new. That's interesting.
And there's a difference between filed and accepted.
Yes.
Filed is you filed. Here you go, IRS. Okay, that's nice. Accepted means it truly was accepted. It should probably be in the system shortly, if not already there. And so that's always another thing too. And
that's a biggie that we could go back to COVID, Mr. Paul, because holy cow, that was a big.
And don't forget that the requirement is like on a business acquisition, it's on the seller primarily. Now it's optional for anybody else, but it's always needs to be for that borrower. So if you have a co-borrower situation where you have, let's just say Paul's Plumbing, you're buying Paul's Plumbing, and Paul Long is also a co-borrower, you need tax transcripts on Paul's Plumbing, the selling business, and Paul Long, the individual. So don't forget, it's all based on co-borrowers.
Well, and I think you bring up a wonderful point about tax transcripts, Paul. Quite often you see SBA shops overdo the transcripts. Transcripts are required on the buying entity, the borrowing entity, or if they're co-borrowers. Sometimes you see shops that will get the tax transcripts on all the individual guarantors as well. Now, I'm not saying don't do that, but your tax transcript requirement is on the borrower or co-borrower. And in the case of a business acquisition loan, the seller and the borrower.
Yep. What? So you had tax transcripts. What was the next one?
What was
last minute lawsuits?
Okay, so wait a second. I'm gonna go the last minute lawsuit, man. So that one definitely we need to be talking to people way up front, because I think a lot of borrowers do not realize the differences in the different lawsuits. They think, they're just talking about a lawsuit against me. That's against my business, or that's against whatever. Guys, it can be freaking divorce. It can be divorce. It can be it can be anything that is on the record. That is a lawsuit. That is a judgment waiting to happen, right? can totally, completely take the deal out.
But what's important though is remember that it's about who's doing the suing.
Yeah.
Yes.
Right?
Yes.
So are you the plaintiff or the defendant? So if you are the plaintiff, you're the one that's suing Tonya for being too awesome, then that one's probably not, that one's going to be okay unless Tonya is the borrower, then she's got a problem. But
what
if
if
you flip
Tonya
it around,
countersues?
oh, good point. Good point.
Because what if Tonya has some
Doesn't
serious
agree that you're
internal
awesome?
issues and thinks that she's unworthy?
Okay, got it.
But,
Okay, and now that our listeners have thrown up, okay, what else was on there, Lance?
Yeah, Paul brings up a great point. You have to look at the lawsuits from whether or not it has the impact to, or the potential to impact cash flow or capital of that small business.
Simply put. Yep. What else was on that list?
Weird equity injection verification. This one doesn't happen often, and my rule on equity injection is it needs to be vetted out very early in the process. You know,
I'm coming to your house and I'm looking under your mattress.
Yeah, I've seen equity injection where it comes from more sources. Hey guys, tell your borrowers. I used to do this. I used to say, okay, you have a $50,000 equity injection. Please come to my bank. We'll open you a business account. Please drop that $50,000 into that account, and we're going to close your loan in 2 months. And but they're not like that. You know, you have equity injection that comes from multiple sources. Sometimes you have equity injection that comes from a foreign source. That's kind of a touchy subject. Equity injection potentially could come from a foreign source, but right now it's kind of a touchy issue. So I'm saying verify the source of equity injection early in the process, during underwriting, during the sales and underwriting process. Do not let it get to close if you've not fully vetted or equity injection.
Go ahead.
How many month statements do you require? I've seen two. There was one that I even saw at one point, and I don't know if it was this SOP or another SOP or an SOP I made up in my head. I'm not sure. Do you remember one with one or?
One was 90 days or 3 months.
See, I always thought for me at least, I always thought it was the month of. So you have to have, whether it's transcripts or something like that, because you might not have a statement of the month of or the time frame the actual injection came in or the money moved. And then 2 months, full 2 months prior as well.
Yeah. That's correct.
So injections. The other thing with injections, even if they don't, open a business account, guys. If you're out there, open a business account. If that's what you're going to do, let's say it's a startup, let's say it's a whatever, take your chunk of freaking money, put it in there. That way we're checking that chunk of money that went in and everything else is running through that business account, whether it be, because that's what I see as the intermingling of personal and business. That gets so flippin' challenging because then we're having to check every large amount of money that comes in to make sure, or credit cards that have they been paid off? Did it really go towards this? Or are you paying something else? Keep them separate somehow.
It certainly helps, but it's not always that way. And that can cause, if you don't vet the source of equity injection early in the process, it could implode a closing.
Absolutely.
That's true.
Oh, and the final one was contractor issues. You do all you can to properly vet the contractor. SBA loans are not like regular construction loans. They don't close as quick typically as a commercial construction loan. Contractor gets antsy about all the process. And then 2 weeks before close, he's like, I'm done. I'm walking away.
Construction is a whole different beast.
And that's
you do a lot of construction, Paul?
I do some. I don't want to do a lot. How's that?
I used to do it. ton.
Yeah, that's what I
I've
thought.
run into every one of these, I'm sure. Yeah.
Well, I think the solution to the construction problem is just having good proactive communication with the contractor when you're vetting the contractor and explaining the process. But I've seen in a number of instances where you had a contractor that 2 weeks before close, 3 weeks before close, or the day of closing, they said, "No, I'm done." And then you have to back up and start over.
You know what I really loved? I had a really great monitor, Krista Hansen, and she would get involved in the process very, very early. So, because I mean, we get the estimates up front from these contractors. They're not going to give us a fixed price because they don't know what that price is going to be by the time we actually get to the closing table. So we get our estimates, we get what we think and all that. She would come in early, review that, get on a call with the contractor, myself, the borrower, to go through the process and really what was necessary. I'm telling you right now, that saved so much, because many contractors have never worked with the SBA or SBA debt, the A1A. I mean, they've never done it.
Yeah.
They have zero idea what's coming down the daggum pipe for them.
Yep.
And then they want to do their change orders. They want to do this. So to get that process, I think, explained early and everybody on the same page, definitely helps when you get to the closing table of knowing what's coming. What do you think, Lance?
Absolutely. Like I said, just a good process of communicating with that construction contractor. Guys, I miss the days. I worked at a bank that was large enough to have their own construction department, and that took all of that off my plate, and everything was fully explained. But if you've got construction that's part of the deal, make sure you're communicating appropriately with the contractors.
Yep. All right.
Sure.
And that's all.
Tonya. I think that was quite a bit. That was a lot, and we'll continue to have these kind of episodes as we go.
I think we're going to do this more often. What do you think? We're going to do like a train wreck over.
Well, I also want to get and if you have, if you are a lender listening and you think you have the coolest train wreck, I challenge you to reach out to Tonya or I on LinkedIn, and we'll have you on here to share the story, because and we want to hear the details. I mean, I want to hear it all, man. Yeah. So
he wants to hear the crash and burn and smell it in the background.
I want the police. I want the murder investigation scene photos. I want it all.
Don't worry, no deaths. Anyway, guys, Lance, thank you so much for coming.
Oh, it was great.
We always love having you on here. You know that.
Thank you so much.
Anyway,
and congratulations, by the way, on the new grandchild.
Oh, thank you. Thank you so much.
Yes. All right, guys. So we're here every Tuesday morning live at 9 a.m. Mountain Standard Time on YouTube and or LinkedIn or any of the streaming platforms where you get your podcasts. Go check out our previous or past episodes or some of the episodes from our sister show, the BDO Show. We love having you on, and we want to talk to you about it. As Paul just mentioned, we would love to hear from you, either items that you want to chat about, different discussion topics that you want to bring up, and or your most recent train wreck. Other than that,
nice.
We will see you next Tuesday morning live right here.
Have a great week.